We don't often see this happen. A company, Teladoc, stocks up 200% this year. Livongo, another company, up 470% this year. This is the real market, people. They are agreeing to merge this morning in a deal valued at $18.5 billion. One of the most exciting deals, if you've been following the legitimacy of telemedicine and also the ability of being able to take control of your own health care, which is what Livongo does. We are so thrilled to have Jason GOREVIC, who runs Teladoc and will be running the combined company, and Livongo's executive chairman, Glenn Tolman, joining us now. Gentlemen, congratulations on a blockbuster merger that could not have been done, unfortunately, without the pandemic, but is going to rule. I want to start with you, Jason. You're going to be running the combined company. I was looking at Eric Topol's book, The Patient Will See You Now, and he predicted that there would be this company that would be the Uber of healthcare, and it was named Teladoc, and you had done 120,000 consults in 2014. How many consults have you done now? How big are you, and how pervasive you are, both here and worldwide?
Well, our guidance for the year is about 10 million virtual visits this year, but we're just scratching the surface. And bringing together these two companies is the next step in creating a paradigm shift in what people can get from virtual care, regardless of what their clinical condition is. And I think it really has the opportunity to be that destination for consumers, no matter what they're looking for in healthcare.
One of the things, Jason, again, just before I go to Glenn, that I felt has really worked in your favor. No one wants to go to a hospital anymore. To go see a doctor, they find it frightening. Teladoc has picked up a huge number of people this year simply because everyone's afraid, right?
That's exactly right. I mean, I think this was a catalyst. We were already on a tremendous growth trajectory, and the adoption was happening anyway. But I would say that this situation has accelerated consumer adoption, provider adoption, and the role of virtual care by at least 3 years. And you know, that accelerated the bringing together of these two companies, which I would say was inevitable. I just didn't expect it to happen quite this quickly. And when Glenn and I started talking, it became clear that putting these two leaders in healthcare together was better than us trying to sort of duke it out in competition, because we were ultimately going to converge.
All right. So, Glenn, I got to tell you, that I've been a big fan of Livongo and of your work, which I've known for 2 decades. Your stock is, as I mentioned, up 470%. Why give in now when you are obviously the leader in what I regard as being mentor medicine, people where you are really life coaching people with lifetime diseases like diabetes? Yeah, the world's your oyster. Why throw in your lot now?
Well, I think this was an opportunity to connect with a company that had a shared vision. And as Jason talked about, this idea of having one stop, this merger creates the global leader in consumer-centric virtual care. And neither of us could do that alone. And so what we wanted to establish with people was one place to go, create a longitudinal relationship. And this brings together the two fastest growing companies in the space, the two most innovative companies in the space. Jim, when consumers look at this, they don't want to go to 4 different places. They want to go to one place, and they want to have their entire transaction managed. And that's what we've created here. So we've made it easier for people to stay healthy, and we put the power back in the consumer's hands. And so that was so exciting. And we knew either we were going to, as Jason said, we were going to compete, or we were going to come together. And we decided the best way to impact millions and millions of people was to come together.